welcome back to Mutual Fund Cafe. Of course, we are discussing outlook for 2018 and it's the last part of the show. So let's drill it down to top conviction. Manish, top conviction bet for you in 2018?
I think I'll go with large corporate banks, the ones with high CASA, exposure to corporate sector, because I think the asset quality pain is broadly picking out. So over next 2-3 years, as the credit cost comes down, if you look at it from a 2-3 year down earnings, they are 5-7p kind of stocks. So I'll go with them.
Okay, actually I was looking at your portfolio. You have a large investment in SBI already. Well, so on that note, to come to Navneet, your big call for 2018 sectorally.
A few months back at the same place, we discussed about few C's. I think there was corporate lenders, communication, construction, chemicals. I think that doesn't change. They have done well, but I think some of them have got a lot of steam left. But I'll just take half a minute that next year I think it's a lot more about stock picking. All the auto stocks may be at a peak, but you get one of the largest auto stock at a different valuation. All the consumer companies, different valuation, but one of the largest one may far cheaper than the others. I think in each of the sectors you can get stocks like that.
Oh, that's interesting. And of course, you know, we have some of those stocks in your funds, and yes, some of those themes have done well. Naren, what's your big bet for 2018? 2017 it was telecom. For 2018, what's the big bet?
It's upstream oil.
Wow.
It's a sector which has not done well for a long period of time, and it's completely ignored, although there are stocks with a good quantum of market cap. So to me it looks like if I had to bet with a one-year view, upstream oil is possibly the only sector where there are some very cheap stocks both on price to earnings and dividend yield.
And mostly PSUs over
Yeah.
there? Okay.
Yeah, but then that will also mean people like Aman Offshore have a very good time, or whatever, Dolphin and the other ancillary.
We've been talking about ONGC at an inflection point, and that has been doing well. So that clearly is Naren's big bet right now.
Point taken. Nilesh, what would you think are some of the likely outstanding sectors, or one outstanding sector for 2000?
There's only one sector which will remain outstanding for years to come. Companies which are disrupting existing business models. The game will be played between disruptor versus disrupted, and within one sector, let's say for an automobile sector, we'll see a company which is only focused on internal combustion engine will bite the dust, and someone who is in electric vehicles will continue to rule. So the game is about, are you able to invest in companies which are going to disrupt existing models? I'll go with disruptors rather than companies which will become dinosaur by getting disrupted.
But
all
the
of you have
problem is they're not listed, like the Olas and the Paytms of the world.
Many of the disruptors are not listed. That's a fair point. Maybe therefore IPO markets are going to be interesting even in 2018.
Yeah.
But you know, all of you have spoken about the fact that you know, valuations are at the moment fair or maybe slightly fair plus. So in that event, Naren, what is a wise thing to do? Is it good to stay with the top among the leaders like autos, Maruti, NBFCs, Bajaj Finance? Is that a good thumb rule?
See, I take this boom like the 94-95 boom, and if I take that experience, I believe that one has to choose large caps over mid and small caps. And the second is people have to respect asset allocation and invest in debt not for returns but for capital protection. These are the two. And in 94-95, people just moved to the weakest quality companies at the end of the cycle and lost huge sums of money, and the markets didn't recover for years. So I would say that people should avoid the weakest quality companies as well.
Okay, people should avoid the weakest quality companies. What would you avoid in 2018, Navneet?
I think you have to focus on valuations. We have seen, as I mentioned earlier, a very big gap between people who have delivered strong earnings in last few years. They have got re-rated, while in last few months we have seen some of the value plays doing well. I think over the next maybe few quarters we'll see that momentum increasing, where some of the value in terms of valuation, wherever they are cheaper, I think they are likely to do well. I can talk about one of the largest IT company, one of the largest consumer company, one of the largest auto company, one of the largest bank. Some of those within the sectors where the overall sector may look richly valued, but I think some of them are far better valued than the other ones.
Okay. Any mistakes to avoid in 2018?
So it's a strange situation because quality is done well. So I think, to me, the biggest risk is in high ROE companies where you have big issues in terms of growth 5 to 10 years down the line. So typically, I think expensive stocks in cement, two-wheelers and all I'll avoid.
Okay. Nilesh, one mistake that investors should avoid in 2018.
So in 2008 crisis, before the crisis, there was a bank CEO who was asked, what's your view on the market? And he said, while the music is on, party is on. And when the music stops, you should be nearer to the exit gate so that you can get out. I think there are some pockets in market where illiquidity is creating a premium valuation and higher prices. Either the promoter will come to sell or some other investor will come to sell. And at that point of time, I don't want to be caught on the wrong side. So I will avoid those stocks where floating stock is minimum. And because of that, they are getting premium, super premium valuation.
No, but just to come back to the point that Naren was making, should we also think about capital protection, and therefore should investors start consciously concentrating on debt?
So essentially, whether markets are bear market, bull market, you have to focus on your asset allocation. You are not investing looking at 1 year in equity. You are investing looking at what's your objective. So our recommendation has always been, please consult a financial advisor, get your financial planning made, and based on that, you start allocating your wealth into various asset classes. In a bear market, definitely be overweight equity, but don't be 100% in equity. In a bull market, or a bubble market, try to be underweight equity, but don't become zero in equity. So maintain your financial discipline and consult a financial advisor who can handhold you through the ups and downs of the market.
Okay, in all the mutual fund ads and in all the mutual fund communications, towards the end you hear mutual funds are subject to market market risks, right? Mutual fund investments are subject to market risks. Naren, what's the biggest risk in 2018? Is it global crude oil or is it domestic, like politics? We head into big state elections.
I think the equity market boom in the rest of the world is longer. So it's been from 2009, whereas our cycle is from 13. So I think clearly global is a much bigger worry when you look at 2018 than any other part.
What's your sense, Navneet? Biggest risk?
The biggest risk always comes from corners where it is least expected from. So while one can talk about oil prices, normalization of monetary policy, you can talk about in India also, maybe the interest rates going up. But I think the biggest risk would be if the earnings growth doesn't materialize this year. For the last 5 or 7 years, at an aggregate level, there has been a drought of earnings. I think next year for markets to sustain these valuations and move up, you need earnings growth.
Okay. Manish, from your point of view, what would be the key risk factors?
My view is, if I look globally, the late cycle economy is US. So my sense is this cycle ends with a US slowdown or recession. And when it happens, anyone's guess, but you need to monitor that data very closely.
But that's a risk because last time that didn't really act as a big risk for the emerging market equities.
So basically what has happened is US started the bull market in 2009. Emerging markets started in 2016. India, of course, had a mid-cap rally from 2013, but on Nifty, we also started in Feb 2016.
After the budget.
Now, traditionally, US gone into recession every 7 or 8 years for last 50 years. So you're already due. But it may go on for 2-3 years. But I think the turning point comes from US.
Okay, finally, Nilesh, as we've been saying, Nifty gave 25% this year, mid-caps have given 45%. Will the table reverse in 2018?
So the divergence will narrow down significantly.
But will it be that large?
But will it be that large cap will outperform mid and small cap? It will all depend upon what stocks you pick up. Indices may not be able to reverse the table, but within that, stock picks can definitely differentiate.
Okay.
And I just want to add one thing. You know, in the last 25 years, mutual funds are subject to market risk was the tagline. But now I think the tagline is mutual fund sahi hai.
That's an excellent way to end this conversation. Naren, Navneet, Manish and Nilesh, thank you very much for joining us a word from our guests. One thing that stood out in this conversation is that there is a bit of skepticism, a bit of worry. And usually markets don't peak out when fund managers are so skeptical. That gives me the feeling that 2018 is going to be yet another great year for equity investments. Thank you very much.